Happy New Year. It's a hopefully 2023 will be a great start off for you and you had a great, wonderful holiday. Just wanted to let you know the stock market has dropped for a few days, but so far 2 days up, 2 days down. And what drives the market is really again the expectation of the Fed rate. The last 47 for the first 5 days were followed by full year gains. That's full year gains of 59 times of the analysis that tells you if that happened that you say really good news driving the market that can potentially actually going up. But there are also chances that in the last 18 pre-election years, 13 full years follow direction of first 5 days up, and then with 4 trading days, it actually will make it actually going down. So we'll see how things look like. It's just showing you that there's some relativity of the market and the predictions. Actually, I see both sides. Some people are very optimistic about how the market reacted, and while some of them have some disappointment and talking about potential recession. So either cases, I mean, it really depends on how your view is and what you're looking at this point, right? So the expectation that for sure the 235,000 jobs were added in December were better than the forecast, and also talking about the salary increase. So I personally don't measure that way. I don't know. For those who are actually getting salary, knowing that you don't get a raise. So, I mean, what is this measurement really trying to tell people and speculating in the market, talking about whether there'll be rate hikes slowing down or not, right? In any cases, I think the important is to look at the long term, right? But I do want to share with you, what what I've seen in that, and while you haven't seen it, and think a bit from the perspective. Well, there will be some external factor going to drive in the market in 2023. And one of the biggest news possibly is really that the outbreak of COVID in China, they're going to be, things were going to be back to normal. I mean, I'm so sure you hear about news about how many cases, whatnot, but eventually we understand that just have to go through. If you look at, what happened in America, once you went through the waves, it will eventually back to normal. People who got sick, actually have the immunity. Of course, you read the news talking about the mutation and whatnot. But we know that, I mean, with flu and season, in the December, every year, how many people actually suffer in the hospitals and die, right? So, I mean, it's just the nature of the world, right? I mean, sick birth and sick and death. So I hope, you don't get too paranoid about the news yet. We really hope everybody will have a good health. And the way how I seen it is, I just went back from Hong Kong recently, is I think wearing a mask is still a key. Trying to stay out of the crowd. I mean, don't stick around longer than 15 minutes. So you also hear news that people stick around the bar and, places, restaurant for longer time, obviously. That's how they get COVID, right? So if you do those places, maybe you wear a mask still, all right, just to protect yourself. But again, it's a personal choice, but I just want you to be cautious about sharing what I know, right? And what I find out that seems to be a way to kind of help yourself, right? And look at the market itself now. The tech is still continue to be being pressure. We know that it's just due to the high cost of borrowing. And the stock that I recommended, some of the startup stock office is still being pressure. But the way I would tell you is this, right? Still very consistent message. If they survive and they don't bankrupt, right? Because some stock not going to survive. You see the oil industry, for example, in 2020, 2018. There's a lot of upstream end had the bankruptcy because of the oil prices were not performing, and then as well slowing down of demand due to COVID, right? The year after, so you really can tell you that if you have a cash as a king, so you really want to look for a company that have some cash on hand, and you'll go through this difficult time. Even if recession happens, so what? I mean, if they may have a slower and lower earnings, right? I won't. Actually, the earning will call it profitability, because the revenue number actually will go up, right? If they say inflation, that means everything you buy for $1 today, you become $1.50. So actually, the revenue number should be great, but really what it is the profitability going down, and also the ratio of what we're trying to analyze from a stock valuation perspective will be actually not as attractive. But people always tell you you're forward-looking of the state of the prices and so on. So something to think and bear in mind. So, but then at the same time, I want to tell you, like Facebook as an example, it was grounded in the low end at $80. If you were bought that and now it's like way all back up to $130, right? So potentially it can still go up hopefully $200 because if you remember Facebook, I mean, it was like $300 coming back down. It's still very low in valuation. Netflix is from $770, going all the way back down to 200 with very high pressure, selling pressure. But it's kind of rebounding with the Queens, what happening, and then with new film coming, new series coming up, so that driving more, more attractive to users and subscribers. So it's kind of getting that. So I would say while the market was telling you, oh, these are not good to look at, you do want to look at the valuation and think through what is, well, for the long range, how you stack yourself in your portfolio. Okay. So, for example, Amazon was from $200 high, now dropped to $81 low. And so it's really dipping, in a rebound, but $86 from January 6th low point. And then Google also is from $150 high to $87 now. So after the split, you believe these companies are still going to be there and survive? I don't know. I mean, your perspective, I truly believe you will go back up. Like Tesla, for example, well, we're really, some people were saying evaluate the stock may go down to $45 a share. But at one point, somebody pushed it to $4,000 a share before the split, which is really a big distinction, right, between the two high and low end. But I have to give you the fact that the stock was from $380 to $113, right? Drop back to the level of 2020, which is a lot of stock really kind of normalized in this perspective that going back to before COVID, right, was where the pricing were value at. But you got to bear in mind in that 2 years where we work from and staying at home, these stock will continue to grow in revenue and sales. So technically meaning the balance sheet actually look better, compared to 2020, right? So why would you not think that the stock worth more than in year of 2020, unless the speculative factor into place, right? So a good example, again, Facebook are giving you the rebound back. And then the other one I want to bring it back to is Pinduoduo PDD. So there was a delisting risk, right? And fact that they're driving down the stock down as much as $25. Look, right now at Friday closing price is at $90-ish, right? You just say you got it at $50, right? And now it's like almost double, right? 100% return in a year. So that tells you how much fluctuation of these stock going to be, right? And it will continue to be that way because it's just from a valuation, a business perspective, an earning perspective, and external reporting factors and Fed rate, all this stuff element together, right? You're just seeing the fluctuation there. And then the other one I want to point out too is last year we're talking about Bowling, right, which is a stock that I tell you to buy, and the stock office we bounced back nicely from 107-ish range to now 213. I actually think it will go up more. Like I said, if you look a few years ago, it was like $500 this stock, and it's dropping so much. And obviously, China already predicted that China Air will they will reopen, and then the more traveling going to happen again. So then they actually bought some jet from Bowling, and that's what rising the prices to be upgraded, and the price is gone up. Now for the EV space, I still believe that HYLN, the one I recommended, which is not doing very well right now, but if they survive, and also XPEV, which you can look at buying a stronger one, which is a Tesla, right? A bigger in the market leaders, that will be actually thinking about the valuation. I'll put that in the watch list. And then the last one I will also mention is 3M as well. The stock have been beaten up pretty badly too, so that is another one that you can put in consideration. I would do want to share with you some fact, right? So the market gives you a lot of news, which probably is more manipulative than whatever, right? And based on the indicators switching every day, it's like daily news giving you what's going on. But if you look at for the long-term investor, here's a thing to help you with your mindset, right? What we know, Fed have been very clear about that interest rate. We're going to rise the target to 5 to 5.25% range, right? That's given. Okay, right now we're at 4.5, 4.7. I wasn't following much. And then election year will be 2024. Okay, historically telling you that the people who are in office will find a way, look for the way to make the economy look so great. Life is wonderful, and so they actually not going to raise interest rate. They may even give money away whatnot to earn their vote, right? So that tells you that we went through this year 2023. There's a lot to go on to 2024. China policy is very unchanged at this point of the EV, still predicting how many percentage right in 2025 to be using electric vehicle. And that's kind of saying, talking about prediction of demand. You can read the news about Tesla, you can read the demand about Xpeng and NIO not making money, whatnot. But the fact is, I mean, the sales slow it down, we know that, but you will probably rebound somewhat to hitting that number. And for Hong Kong, since the loosening of the policy, you also looked at the Hong Kong stock market had really rebounded significantly from the Hang Seng Index 14,000 lush low to now it's like over 20,000 again. So the prediction probably, they were strong in 33,000, dropped in 14,000. So probably we hit about 25,000 would be a range what I'm thinking going to be, for a while at least. So again, there's a lot of, new cases, right? Offices arising, but that's just part of the normalization, right? I mean, you have gone through that just like you have a job. I mean, at the beginning, you have to be very painful and learn what you're doing. But once you master it and get over it, you stabilize it, and then you're back to really mastering what you need to do for a job, but back to not overtime as much, right? So ultimately, you will get to the happy place. So again, there will be room for on momentum that going to drive the market, in the next couple of months, I believe, and it all depends on how the interest rates shape up and really what the indicative, kind of what's going to happen to the Fed. But again, the long range is very clear to you that is going to target for the rate. They're going to be up to. Obviously, there will be impact of housing market, and the cost of borrowing, which is true for large corporations. Really, 1% is not going to, it's not going to make them go out of business, but more for small business. So I hope I give you enough to help you to drive what to consider in now, and some of them I wish I've done the last week this video to tell you the tech that have been pretty low bidding up and taking advantage of the earnings season, so you can take advantage of that. This is Sam Wong. Hope you enjoyed the video.